Can everyone see that? Yeah.
Yeah.
Yep.
Yeah, we can see. Yeah.
Okay. So risk is something that has pretty much been flogged, and everyone talks about it. But through my clients and things like that, I've actually found that it's not quite discussed in as objective manner and subjective as what it should be. So, like with this, I think the monkey is in for a bit of a bad day. But you never know. The lion could be dead. You never know. And I think it's subjective with everything that we do. And I know Partha talked earlier about context, and there's a lot of context in risk and risk management as well.
That was a brilliant start, Kelly.
Sorry, you have to forgive me. My voice is going at the moment. All right, so looking at risk, I'm not going to go too much into the basics of it because everyone knows what it is. So obviously it is something that components of it are considered to be a threat by people. The threat really depends on what the goal or the outcome objective relates to. Me going and buying a jar of coffee is not going to be the same as me putting a trade on. And how important that is. I'm pretty sure my children think that coffee is much more important for me than the finance sector of it because I get quite grumpy. All right, there's risk categories. With the risk categories, that's what I think makes it very unique and very subjective for people. The categories, it's not just about where the risk fits into the category, but where that particular thing fits into the risk. So if you say got health issues, then that health issue may affect your ability to assess a risk or decide where things fit in. But at the same time, actually making that decision and the outcome of that could actually also affect your health. So it's not just a one-sided thing. It's two-sided. And talking to my clients a lot, I think a lot of them forget that dual part of all of those things. So sorry about that. With the categories, so financial, obviously, especially in the industry here. Professional, so whether we are professionally going to be affected by it or whether our profession is going to affect it. Legal, being a psychologist, legal is definitely one of the things that I have to look at. Our general well-being, what's going to affect me. And again, that's also a really big thing for me with my work. I have to decide sometimes whether actually taking on a client is actually best for me. Our education and knowledge and our environment being not just where we are, but also who's around. And mental health is a really, really big thing, especially in the finance industry. I think we all know that because otherwise trading psychology wouldn't be such a big thing. Relationships, I mean, there's many times that you've got to sort of think about whether it's worth putting on a trade or whether it's worth doing something because your relationship could be at risk for it. Technology, I think everyone knows these days technology can make or break if your computer goes down or different things don't work. Health and personal liability. I think most people who teach or have some sort of profession where they actually guide other people, I think personal liability is a really big issue. I have to be very clear about my legal obligations when I see people. and social. So social being, our friends, our family, what we're taking in from them and what we're giving out to them. Our risk profile. So I'm not sure if people are very familiar with risk profiles themselves. It's basically what we as ourselves are willing to take on as a risk, not how much we're willing to take on, but how keen we are to take on a risk as well. So there's different categories with the risk profiles. So there's the conservative, which is obviously risk adverse. People put on low risk investments. They won't take those big risks. They would rather just safe and smaller returns. Moderate is, goes without saying, I suppose. There's a balance. They're willing to take on a certain amount of risk. It's well justified, well researched. It's sorry. It's they're open to a moderate degree of market fluctuation. Aggressive style is person who is willing to take a higher level of risk. They are willing to tolerate more market volatility, and they're willing to take more of a loss for the sake of a profitable trade. Speculative is pretty much just, I don't know, grab, hold on, and hope for the best. Really risky, but the point of it is to I suppose, make the most as you can while you're making money. So self-awareness is one of the biggest aspects to this. Sorry, excuse me for a moment. Sorry about that. Self-awareness, I think, is one of the things that is the biggest guard we have against our risk, things like that. We're a bit of an onion with our self-awareness. We have the four basics. So we have ourselves, that's our perception, our perspective, our thought patterns, what we do on the inside. Context. So again, the jar of coffee versus the trade, the time of the day, the work versus home, the different situations and the different context is going to change the way we make decisions and the way we see the risks. Other people, how much other people influence us? Are we taking on other people's goals and motivations, or are we using our own beliefs for the things that we're doing? It's also, in this regard, who influenced us up until this point while we were growing up. What were we exposed to? What did our parents, guardians, our school, all of those things, our culture, what were we exposed to? And our environment is our environment at the moment. Is it the right place for you to be for an achievement in a particular goal? So if you're in hospital or those sorts of things, then there's no point in wanting to go and run a race. When we are looking at self-awareness, we are also looking at things like self-reflection. Introspection. So self-reflection is actually reflecting on our thoughts and our experiences and our actions and things like that. So our introspection is the actual examining of them. So not just sort of looking at them and acknowledging them, but actually analyzing themselves. Our strengths and weaknesses. So we really need to look at our strengths and weaknesses and what things we can use and what things we need to avoid. self-concept, which is our identity. How do we fit in together? How do those strengths and weaknesses all fit in to make us who we are and how we make those decisions? Our motivations and goals, so again, are they ours? Are they things that are important to us? Or are we listening to other people, being guided, doing the right things? Social awareness is what's happening around us. Are our goals actually fitting into who we are around? And, that is one of those things that you have to make a decision of. Do you want to be around a person who perhaps has different goals and beliefs and values than you do? And if you do, you just have to take that into consideration. Feedback reception is something that a lot of people have difficulty with, is actually taking the feedback on and actually doing something about it, not getting offended, actually looking at it objectively. And our adaptability is our flexibility, being able to change. I'm pretty sure people have the core beliefs. I know what those core beliefs are. They're I'm not good enough, I can't do this, I'm never going to make money, I can't find success, those sorts of things. The bias. I mean, they talk about bias a lot, but there are different types of bias. The cognitive ones, which I think most people are aware of, but with our behavioural ones, they're the habit behaviours that we have. Emotions are really our automatic emotions that occur with a particular thing all the time. There's also the neural bias, which is actually quite important because it actually affects what you see when you look at your charts. It's colour, actually. Your brain and your perception will actually pick up on colour. So if you're using black and white, you're actually not going to be as focused as what you are if you're using colour. And our cognitive distortions, which are the fortune telling. So just because you know what's happened in the past, you know what's going to happen in the future. The black and white thinking. So with mindset, it's positive, negative, win or lose. There's no in between. So there are different categories as far as self-awareness is concerned. So sometimes different things fit into different categories, and sometimes they fit into all different, many different ones at the same time. And it's how important those particular categories are for you in the context of that decision and that risk that you are looking at. So with behavioral self-awareness, you're looking at your behavior patterns, the tendencies you have to do certain things, what behavior patterns you have in a particular trade. Do you focus on one thing more than others? Emotional self-awareness. So emotional self-awareness, I think, is knowing that when a particular thing happens, you instantly feel anxiety. Somebody with PTSD will perhaps get into a car and instantly react because they've just reacting to that, and having that emotional awareness will help them. Decision-making awareness is, I suppose, what you feel you are like when you make your decisions. Are you one of those people who thinks can? Many people feel like they can't make decisions, and that doesn't help. Situational awareness is when you're in a particular situation, context, really, again. In certain market conditions, are you more likely to do something and perhaps miss information that you should have seen? Communication. So communication isn't just actually communicating out. It's also what you interpret from the information that you get in. So that's where things like your biases come into it. Do you only pay attention to things that you see that match what you want to see? Financial awareness is obviously, again, our financial state, but it's not just that, it's our risk tolerance, risk appetite, it's our profile. It's how much do we know about our finances and our financial situation. I've been doing some study with neurofinance and things like that. It's quite interesting how a lot of people aren't realizing how much there is involved. Perceptual awareness is, so perception is what we see. It's that, like the color, you see color whereas you don't see color. Sometimes the biases can be considered to be a perception. Mindfulness I love. It's whether we are in the present moment. Are we paying attention to where we are, what is happening right now, or are we a million miles away thinking that something else is going to happen? That fortune telling cognitive distortion. Yeah, we're not actually paying attention to now. Sorry about that. So a cognitive is our thinking. It's our way of thinking. How are we thinking? Are we aware of how we're processing things? Are we looking at analysis properly? Are we analyzing position sizes? Are we looking at the different biases that we have? It's all about cognitive things. It's where that one is very much the top-down, bottom-up thinking. And we need to realize identify whether we are top-down, bottom-up. Spiritual, I love spiritual also, but most people get a little bit freaked out about it because it's not religion. It's understanding ourselves on a deeper level. It's our beliefs, it's our values, it's what's important to us and what makes us want to get up in the morning and be happy to do it. So if we want to look at certain mistakes, I suppose, or challenges that happen, it's when we have that fear of loss. So that affects the decision making. With your self-awareness, you need to know that you have that emotional bias there. You have that fear, and you're going to see more information that tells you shouldn't than does that you should. And chasing the market, it's when you find yourself chasing trends because in the past you've been too late, you want to catch up, neglecting your risk management skills, or not actually having one that suits you. There is no one size fits all for risk management either. The lack of adaptability. So are we able to adapt to market conditions? Are we stuck in the cognitive dissonance and the cognitive biases and we can't get ourselves out of them? Patience. I think patience and discipline, I think, was one of the things Partha also talked about last masterclass. And that's just waiting and not jumping into things. Let's not impulsive buy. Let's just wait and see how we go. Over trading is that tendency for the fear of missing out. Or maybe boredom. We feel like we've got nothing better to do, so we'll just keep going. Some people have that issue that they feel like they should be doing more than they are. Revenge trading, lack of discipline, not following your trading plan, going with gut feeling when everything's telling you not to. and overconfidence. So if we want to assess and prioritize our risk, there is obviously your external numbers game where you look at your risk analysis, but there are different aspects as well. So risk perspective, sorry, that's actually it's called risk disposition and risk personality, and they are actually your behavior patterns and your thought patterns. So if you have a natural tendency to avoid risk, that's when you will make decisions that are more likely to be avoidance. The personality is actually the traits and the characteristics that make up your behavior patterns. With risk identification, so the qualification and quantification. So the qualification is those categories that I talked before. What's important to you? And the quantification is the numbers game. With more of a situational thing is the risk tolerance and the risk appetite, which is pretty much your risk profile. So if you look at risk tolerance, that is your comfort with uncertainty. How much risk are you happy to handle? Some people can't handle any, some people can handle a lot. With the risk appetite, that's how willing you are to actually chase it. So I suppose it depends on how much those mice really, really want that cheese. So looking at those aspects when we consider what is included and what we consider to make that well-oiled machine, we need to look at all of those aspects in ourselves and how they are with us. So mind-body connection, it's the mind and the body are intertwined with everything. When we feel stressed, we have the psychological component of stress, but our body also influences those things by increasing our heart rate. If we're in fight or flight, our prefrontal cortex is disengaged, so we're not able to use that rational reasoning. Perception and perspective. Their perception and perspective are both mind and body, or neurological. We're able to see, and I will have a bit of an example in a minute. Our perspective is our opinions, our train of thought. If we're one of those people who feel like things don't go right, our perspective on looking at everything that we see is going to be that things aren't right, and that's what we're going to look for. So our perception is going to be all of these things mean that things aren't going to go right for me. So there are our beliefs and our expectations as well. That's where our past history, all the things that we've had before, they make up our beliefs and our expectations. But the neural pathways are the things that develop those expectations and the beliefs, but it's our psychology and our mind that actually puts meaning to them. And mindfulness, our self-awareness comes from mindfulness. We have to know and feel our body. We have to feel and be aware of what is happening around us at the moment, so we're not assuming what's going to be happening. So when we look at the neurological aspects of things, we've got the neural networks, which I just talked about before, which are the things that create our experiences, what we use for later. Our amygdala and our emotion. The amygdala and the emotion are things that can shut down our prefrontal cortex, can give us the fight or flight. It can make us work on reaction rather than thinking. Our cortisol and our stress response, that is the start of the fight or flight. Depending on what it is, if it goes extreme, then the adrenal glands get activated, but up until then, it can be possibly that it can actually work to our advantage because the neurotransmitters that are needed actually get stimulated and enhance our performance. So the chemicals, you know, we need dopamine and serotonin. Dopamine is our reward, serotonin is our mood. That's one of the two biggest things. Hormones, if we get too much of the different types of hormones, so your adrenaline and norepinephrine and things like that, then you will end up with adrenal fatigue and your thinking process won't be there. So your prefrontal cortex, the prefrontal cortex is our thinking area. If we don't have a good connection with the psychology side of things, then we're not able to think clearly. And if we have that physiological response, then we're not able to use the prefrontal cortex because our primitive reactions come into it. And our sensory perception. So I was talking about our perception before and how it's a neurologic thing as well as a psychological thing. And I'm pretty sure that people have probably seen this before. It's one of those visual illusions. So what do you see? Do you see the young woman or do you see the old woman? It is based on our perception. So if you look, you could see the late young lady or you could see the old woman. Some people see both. Some people don't see, they just see one. And it's, even though we see the information, it is actually our psychology that, or our mind, that encodes it and tells us what to see. So the vagus nerve, I really briefly talked about before, and that is the connection, that it's a neurological thing, but it is the connector between our mind and our body, our brain. It takes information from the outside world and it takes it up into the brain and it takes it to the different places where it needs to go. And our finer wiring, neural pathways, then take it from there. So sensory information is not just what we see there. It can be the color. It can be all different types of things. A lot of people are colorblind. So what sort of information are they getting that's different to another person? Our thoughts and our responses, if with our vagus nerve, if we don't get the correct information to the correct places, then our thoughts and our responses to different things are going to be, I wouldn't say incorrect, but perhaps not ideal. And with those thoughts and responses, once we have those, then we end up starting to make new pathways that aren't ideal as well. And our beliefs and expectations, the vagus nerve is what? It's the base. It's the very first, when we're born, we only have a certain amount of wiring, and the vagus nerve is the base. That's what we have from the very beginning. Looking at the mind, there are a number of things that actually affect the way we are with the mind. So personal constructs. Personal constructs are where we get all our information from for our identity. It's that core of ourselves that we start developing that is our disposition. It's our personality. It's everything that we have about ourselves. It is our self-image. And it's unlike your neural pathways, it actually can evolve and adapt in a moment as the situation occurs. Unfortunately, a lot of constructs are actually the bipolar opposites. So they're the black and white. The all or nothing, the fixed growth, they're the positive, negative, which can go against us, obviously, because we can become fixed into habits of thinking. Schemas and scripts, so they are actually really important. So they're our memory system. That is what we categorize information into. They are where our mind puts that perception and that perspective. It's that, actually, an example in the moment will explain that better. It's where we categorize that information and where that tells us how to see things in the future. And it is the base for our actions and reactions. So looking at the effect, that's where our biases come from. It's where our risk comes from and how we frame information, our learning and adaptability. So did we learn to actually be adaptive, or are we wired to be fixed and just we are the way we are, we can't adjust? Our attention and focus, our thoughts and our self-talk, those times when you say to yourself, you know, I can do this or I can't do this. I think sometimes feels like the two sides of your brain are fighting. And the expectations we have. So looking at that perception side of things with the schema, the schemas are actually our category of information. It's where we look at, say, trading. Trading is our schema. It is a category for us of the things that we have information within. And within that, we know that there is a number of different things that come with that. So your market analysis, your trends, your risk reward, your different, all sorts of different things. When we look at our perspective, we look at what's happened to us in the past and how that affects us. So if somebody's suffered from a significant loss before, their schema might be that they're unlucky or unsuccessful, which will lead them to more cautious and risk adverse behavior at a later date, even though all the signs might be there that it's actually a really great trade. They will resist. The script is pretty much exactly what it sounds like. It's a set of instructions for what you need to do. Depending on what your belief is, you may forget to put in your stop losses. You might not pay attention and not look at where you are with your position sizing. So they're the scripts that we look at. They tell us what to do in particular contexts. So how can we get to know ourselves better? Instead of being self-aware, self-reflection, I like to rather call it being curious. It takes a bit of the emotion out of it, I suppose. It's a different way of looking at things. It's really being open and accepting as well of what you find, and not brushing it off or trying to excuse it or make excuses at all. When you do question yourself, don't have judgment. You know, people think that you shouldn't have negative thoughts. Well, you have to have negative thoughts. Our species is we are risk. We look for risk. We look for threats. The first thing that we are going to think about when something happens is a negative thought, or a thought that might actually have to do with a threat for us. So the mindfulness again, when you are looking at mindfulness and being in that moment, you can have more of an idea of picking your triggers, picking the things that really matter to you. Formal assessments. So there are a lot of formal assessments. Different things for flexibility. There's all sorts of things that a lot of psychologists have. I've got like a list as long as my arm that will look at how you perceive stress, how you, whether you're like a negative, positive person, whether you're depressed and anxious. I have that list as long as my arm. Journaling is also really good. Not like journaling as far as your trading journal, but looking at your daily behaviors, your daily choices. Where are you, and how is that triggering you, or where is that making you have good decisions? What is a good pattern for you? Professional help. So, that's like me, or coaching, or something like that, or having a mentor and getting feedback like from somebody like Marty and Partha, actually getting that, but being identifying your core beliefs, biases, and actually making up your risk profile is really important as well. I think for everybody, they need that risk profile just in everyday life, not even in trading, just all the time. Know where you're at and don't make stupid mistakes. So what now? How do we improve based on that self-awareness? So building a plan. It's accepting what you find out about yourself, accepting the things that you need to do, and committing to making those changes. Reframing your way of thinking. So emotional agility is, I think, a really good one. It means, not having to regulate or control your emotions. Emotional agility is actually taking your emotions on as just a piece of random information that you can use to help you. There is no emotional content to it. It's taking the emotion out of emotion, really. And looking at things more in the terms of, is it helpful or unhelpful? Is it pleasant or unpleasant? Is it desirable or undesirable? And is it constructive or destructive? And sometimes you'll find that something that's not pleasant and isn't the desirable outcome will actually end up being helpful and constructive, because you can learn your lessons from it. Rewiring your brain. So rewiring your brain, building new neural pathways, making sure that the things that we don't want get clipped and are taken away, and then we get new ones that are the desirable. Mindfulness is really good for that. It helps us identify changes. Gratitude is actually a really good one. There are so many different types of gratitude that a lot of people don't realize what there is, and being grateful for those things actually will rewire your brain so you can actually think of things differently. Visualization is one that I've always used, and I know I get my children to use it as well when they're about to go to an exam. I get a lot of my clients using it as well. It's kind of a meditation process, but you're visualizing how you want things to happen. You're picking a situation and you're visualizing either how you want it to happen or how you could have changed things for it to happen. And repetition, the more you do it, the more it wires. being aware of your external influences. So yes, it is your environment. It's expectations, goals, motivations. Whose expectations, goals, and motivations are you using? Are they yours? Are you doing it because you feel like you have to? Is it a cultural thing? Is it a family thing? Is it trying to keep up with the Joneses? And incorporating your self-awareness, self-development into your trading plan or trading routine. It's if you are to sit down to go and trade, you can, and I'm quite happy to give people some of the assessments that I have, and perhaps just sit down before you're about to trade and see where you are in that moment. Are you in a good frame of mind? I know that, if I come home from work and I'm tired and I've had a really bad day, sitting down and doing things, I just don't want to. I just want to hide under a rock. And the same with trading. It's the same with everything. If you're not in the frame of mind, or if you're feeling depressed and sad on a particular day, then you're going to see things and react to things differently. So it's really, really important to incorporate those sorts of things into your routine or your plan. Even visualization is good in the morning when you start, or nighttime, because some people prefer nighttime. It's sitting there and actually seeing yourself trading well on that day. And trading well or doing a good trade isn't necessarily winning. It's following the plan that you had, doing the things that you should have done right. And if it's not a winning trade, then it's not a winning trade. But the thing is, you've actually followed everything the way you thought you should. And that's when you can actually make changes and make adjustments, because you've actually followed what you've got there. There's no hindsight problems. It's just incorporating that all in there so you can try and do your best. And that's all for me. So thank you very much. You don't want to see my psychotic My Little Pony.
That's a fantastic presentation. Really appreciate. Any question to Katie? You can ask any questions. Kim Marty says, very good, Katie. You can ask any questions to Katie now, or you can actually write your thoughts and think about everyone, including Paul Tudor Jones and everyone. Each one of us is having psychological challenges, maybe in the mind, which Kerry touched, maybe in the get to know yourself, which Kerry elaborated, maybe in the fear and greed side, maybe in the discipline and control side. Or you can actually approach Kerry at this email address, which is kerrybrown@npfinancials.com.au. kerrybrown@npfinancials.com.au. So you can reach her at this. I have just posted that in the chat section. The kerrybrown@npfinancials.com.au, and book the sessions with her. As you can see, in one session she has touched so many things about trading, and all are so relevant. She talked about fear of missing out, FOMO, which we all have. She talked about fear of missing out and fear of losing money, FOLM and FOMO. These are the two critical fears which we all have, and she can definitely help us to help you or me or anyone to go through it and overcome that challenges. Because imagine the confidence and resilience you would feel while trading if the psychological challenges you have were effectively addressed. So how compelling would that be for you? It will be very satisfactory. So taking action now by contacting Katie on enhancing your trading psychology can make a significant difference in the trading results or outcome or in the journal. Doesn't matter whether you are demo trading or live trading your own money or trading partners' money. Our partners' money, $1 million account. Can you picture the positive impact on your trades by overcoming these challenges with the help of Kerry Brown? Yeah, definitely you can. I think, and you can definitely help in this is a lifetime of training which Kerry and I've seen many, including a doctorate in clinical psychology. But the way Kerry treats, because she has exceptional, she has exposure to trading while she was in banking sector, in financial sector. So she has a solid exposure to trading. She understands trading, and the best part is she understands the relationship between our mind, our body, how our body can influence our mind can influence our body, vice versa, all the time, and how getting to know ourselves can help. Yeah. So, any questions to Kerry? And thank you, Kerry. I really appreciate with your challenging throat condition. You did a fantastic job. Any question now or after some time, you can write to Kerry Brown at npfinancials.com.au. So we have 12 more minutes. We are committed 2 hours. Any questions to Kerry or Ben or Mati or anyone? You can ask any questions to Girija. How her trading going on yen, or you can ask Ben how his trading is going on Euro CAD, or you can ask anyone any question. This is your chance. This is your time. Take advantage of it. Otherwise, we'll call it a day in 1 minute. Go for it. Please ask question. Do not suffer in silence. That's a human condition. Humans have become so lazy. I don't know whether, including me, I'm also a human. We have become so lazy that we can't even think of framing a question and asking. I don't know why, but yeah.
Yeah, Partha, I actually have a question in relation to the Pro Real Time upgrade that's happened to the version 12.
Yeah.
And I've noticed on the strategy for the 2-day charts, the range bars are no longer a 4-hour chart. They're just a range bar on its own on my computer. I don't know if you see the same on yours. I'm wondering if that does affect the strategy at all.
No, there are two part to it. So a range bar, not saying 4 hour is probably not correct. Can you see my screen?
No, I can't at the moment.
Okay, just hold on. Let me share my screen. It says we are sharing. I'll stop share and again do the same again. So I'll go here and then present entire screen. Yeah, share, and then hide. Can you see my screen?
Yep.
Yeah, USD JPY in front of you. Yes or no?
Yes.
Yeah. So USD JPY is 4 hours, as you can see. So that live line chart is there. Number one, line chart is there, and it will not change the strategy because the bar size is still the same, 50. So if you are having any problem on the Pro Real Time upgrade, it is quite simple. You can have it. You can have a upgrade. Effect on the upgrade depending on your computer, especially if you are using Apple Macintosh or Apple laptop. Because if you see, we are using here about, and then we are using, if I bring it in front of you, Pro Real Time version 12, and we have the time 4 hours. Yeah, the time here 4 hours for the Pro Real Time charts. So if you have any problem in your next class, we can sort it out. Otherwise, the strategy will not be affected as long as you are using this 50 range bars, and as long as you are having these two last price, if the bar is not yet closed and fill vertical. So as long as that is those two are ticked, it will not affect. Did I answer your question, Ben?
Yes, you did. Thank you, Partha.
Not a problem. We can sort it out in your next class. Well, because I have to see your screen. Anyone has to see your screen and then sort it out if that is 100% sortable. I think. Yeah, I hope you are not using Apple Macintosh or something like that. Do you?
Sorry, what was
Is
that,
your
Partha?
is your laptop or desktop Window based or Apple based?
It's Windows based. I just
Okay, sure.
noticed that it doesn't come up with 4 hours written at the top in the for the range bars, and just either has a choice of range bars or something else. So I'll have to have a closer look at it and see if I can't resolve it. I'll take it up with you next week.
Not a problem. Absolutely. So, any other question? Girija is quite quiet today. He says, all right.
Hey,
Partha,
Partha.
Oh,
Yes, I mean.
yeah, Tyron.
I noticed during my studies, this may not be important, but I noticed a general correlation between Euro USD, or Aussie USD, and Sterling USD on the daily charts. There tends to be a general correlation as to the movement and the direction of those charts. Am I right or am I wrong?
You said Aussie, Euro, and Sterling, isn't it?
Euro, Aussie, and Sterling, yes, against USD.
Yeah.
On the daily charts,
Yeah.
there tends to be a general correlation between them.
Yeah. Yeah, you are 100% right. I'll answer that question quickly. I hope everyone understood what Tyron is asking. Tyron is asking about the general correlation between the uh, three major currency pairs, which is Aussie, which is Euro, Sterling, and Yen, and
No, not in Aussie.
okay, Aussie sterling, and one minor, which is Aussie dollar. So Euro sterling are major currency pairs, and Aussie is a minor currency pairs. But all of them, Euro, whether it is Euro or sterling or Aussie, both all of them, I'll write it down here. So AUD USD, the base currency is AUD, term currency is USD. Simple answer to this question. Euro base is Euro and term is USD. Similarly, for Great Britain pound, base is sterling and term is USD. Term is USD. So in all the three, USD is the term, and all of them, if the USD, and to answer your question, I'll answer in two ways. First, a very simple way very simple way in base and term currency. If the term currency is USD, then if the exchange rate or the interest rate, if the interest rate of US dollar, if the interest rate of US dollar goes up, if the interest rate of US dollar goes up, then then the value of the dollar index, which Marty has touched upon, the value of the dollar index will go up. The value of the dollar index will go up if the interest rate is going up. So the value of the dollar will go up, as in this case we are seeing it is going up, and previously also it was going up. It was going up solidly. It was going up solidly here. All right. So if the dollar index is going up, that means USD in general going up. It will definitely reduce the exchange rate for the Aussie, Euro, and Sterling against United States dollar. And the easiest way to do, again, go back to our old style. Go to make this fellow as the same color. For example, make this one as a line color like this color, and then compare this with the other three. So go to more, more because of the I'm again struggling, but anyway. So what I need to do, I need to bring it to a big screen and then go to more, and then quickly I'll bring that in a second. Go to more. I'll fix this before the next class, next master class. So I'm going to more and then compare to instruments. So I've been comparing dollar with an instrument for euro. I write down euro, and I'll show you in a second. Let the charts come. Euro is in green, and then again I'll go here and then more and then compare instrument, and then I'll do GBP USD mini, and that I will do in maybe red. And the last one I'll be doing is the, yeah, I think you were asking these three. All right, so now I'll bring the chart in front of you. So this is the chart in front of you. So the dollar is in blue. Dollar is in blue. Dollar is in blue. Best is weekly or a monthly chart, as Marty was touching upon weekly charts. Correlation is also best seen on a weekly or a monthly chart. So if you see the correlation between if the dollar index is going up, if the dollar index is going up, then all the three all the three are coming down on the euro and sterling. I've not done the so do you understand? Did I answer your question?
Yes.
All right, so very good. Any other question? You have last 1 minute.
Yeah, Partha.
Yeah.
Do you have any shares out of your ordinary 8 shares or stocks that you follow on your radar at the moment?
8, that's a good question, but the answer is very simple. 8 being 8, lucky number. I don't, honestly speaking, don't see any of the other ones. But if you have any, I can definitely go. I know Ben is having an interest in that. What was that, Ben? I think block. But within the 8, I think the best thing would be the Facebook. I think they have done something good maybe in the generative AI side, or maybe in the generative AI or virtual reality side. Whatever they have done, whatever they are doing, they are really doing good. This is one of our best performing stocks, because if you go to our stock trading, which is the F6, I think. If I click here and then go to file and share the load workspace and load the share trading. So we got this one on the 2 days. All of us got this one on the 2-day chart in front of you for the Facebook. If I go to Facebook for a second, we got the call to go long on Facebook here on this date. On this date, I think that's not the chart which I want. Yeah, I think this one. Yeah. So on this date, which is this one, on this date, and again we went. On this day, 22nd. We were not knowing that this is coming. We were not knowing that this is coming, but it actually came. So apart from that, sorry, Marty, I really don't have any answer for that. But I know Ben is looking for block, but I'm very happy with Facebook the way it is going, and I'm very happy for the other one, which is probably the I think Amazon. Amazon is also doing very good, mostly because of their generative AI's related products. Like Amazon also, we had got an opportunity to go long on this day, 22nd, and it did very good. And we were not knowing that this is coming. Anyone, this can be a general question. Marty has asked, only Marty has taken my name, but if anyone is saying any stock, like Square or Block, or anything. So please share with Marty. Block is actually relatively Ben. Your block is not doing good actually. Yeah.
Yeah, I hope it goes better. I'm long on that on a 1-day chart with a bouncing around a 200 EMA at the moment and just wondering which way it's going to go. It seems to be bouncing along it for a while and making a bit of a base, maybe.
Yeah, absolutely true. 100%.
Yeah.
All right. So if you do not have any other question, thank you so very much really for your time on weekend Sunday. And thank you very much, especially to Marty and Kerry, especially to Kerry for our wonderful presentation for 1 hour with this the challenging throat. Really appreciate. If you have any question, psychology, because trading is 50% technical and skill sets and 50% psychology. I know that everyone think that I'm right. I am not greedy. I'm not fearful, but that's incorrect. I can write and sign that is incorrect. So if anyone wants to take any help, contact Kerry Brown at entryfinancials.com.au. Otherwise, you have a fantastic week ahead because the FOMC is behind us. The Federal Open Market Committee statement is behind us. And probably gold and dollar would be the focus points in the coming week. Have a good week trading and bye for now. Thank you very much.
Thank you.
Thank you. Bye.
Thanks, everybody.
Thank you, everyone.
Thanks, everyone.
Thank you. Thank you.
Later.